Hi everyone. So in the last class we were discussing about business risk, and I hope that you all have revised this topic and you all have read the examiner answer of the previous question, which was Grohl Company, which we were discussing in the last class. So if we take a quick recap of our last class, we started the first chapter, audit planning. And in audit planning, we have discussed the first topic, business risk. We learned that how we have to write the business risk, what is the exam approach, and then we discussed the first past paper question, which was Grohl Company. We developed its whole answer through the exam technique, which we have to follow in the examination. Today, we are starting another question of business risk, which is Connolly Company. I want you all to concentrate along with me and learn the exam technique, which we discussed in the last class. We will do one more question today so that you can understand the exam technique. And I want you all to read the exam answers. We will do total 4 questions of business risk. The first question was Grohl. The second question is Connolly Company. I want you all to read the questions step by step. Read my answer, read the examiner answer, develop some good learning points. Like you can develop some learning points in areas of technological obsolescence, high debt, non-compliance. These are the points which are discussed in the exam, normally by the examiner. So if you will have a list of learning points, then it will be too helpful for you in the examination. Okay. Let's start the second question, Connolly Company. I want you all to please concentrate on it so that you can understand the writing approach. You are an audit manager in Davies & Company responsible for the audit of Connolly Company, a listed company operating in the pharmaceutical industry. You are planning the audit of the financial statements for the year ending 31st December 2014. And the audit partner, Ali Stone, has sent you the following email. So now this is the format of the email which you will write in the examination. I would like you to start planning the audit of Connolly Company. The company's finance director, Maggie Ram, has sent to me this morning some key financial information discussed in the latest board meeting. I have also provided you with the minutes of a meeting I had with Maggie last week and some background information about the company. Using this information, I would like you to prepare briefing notes in which you evaluate business risk, 11 marks. So now you have 11 marks for business risk. If we use 1.5 marks for each risk, this will give us 9 risk. It will give us 9 risk for how many marks? 1.5, 3, 6, 3, 2, 1.5, 1.5. If we simply go, then it will give us 9 risk, and this 9 risk will score 10.5 marks. Okay. Yeah, I think that it will score 10.5 marks. So the last 0.5 marks, we will keep it for trend calculation, trend or ratio calculation. I have told you already that each business risk in the examination will worth 1.5 marks. And if you will calculate a trend or a ratio or any other calculation, you will get additional 0.5 marks for that calculation. Okay. So now we are starting the question. We have some background information. Please concentrate on it so that you can understand it. Connolly Company is a pharmaceutical company developing drugs to be licensed for use around the world. Products include medicines such as tablets and medical gels and creams. Some drugs are sold over the counter at pharmacy stores, while others can only be prescribed by a doctor. Products are heavily advertised to support the company's brand name. In some countries, television advertising is not allowed for prescription drug. So in some countries, it is not allowed to market a prescription drug. So now, we have already studied that whenever you talk about something not allowed or anything like that, we always identify a risk of non-compliance, that there is a risk that they may not comply with this advertising regulation. Now, if you remember the approach, I told you that how to write a risk. We used to identify the risk in the first sentence. Now, if you will identify the risk, there is a risk that cannoli company may fail to comply with the advertising regulation in some countries if it advertises the prescription drug. Now, this is the identification of the risk. Now, what will be the impact of this risk? So you can write that the impact of this risk will be that if cannoli company do not comply with advertising regulations, it may face penalties. Now, what can be the evaluative comment? The evaluative comment is that as the company relies heavily on advertisements, there is a risk that company may not comply with the regulation while its advertisement strategies. Now the risk is higher because the company relies on too much advertisement. And when a company relies on too much advertisement, there is a greater risk that they may not comply or they may negligently run an ad in restricted countries also. Now let's see, I'm writing this risk. I want you all to concentrate on it. I will write it in the same approach we were doing in the last class. I'm leaving this first portion of the sheet for the email, and I'm starting from here. I will write the email in the end. We are attempting part A, business risk. I want you all to concentrate on it and remember my one statement that this question or this scenario will never repeat again. The only purpose of doing past papers is to make you understand the technique which the examiner follows while developing the point, while developing a risk. So the first risk is non-compliance to advertising regulations. The first risk is non-compliance to advertising regulations. Now let's write. First of all, we have to identify the risk. Cannoli company may get involved in a non-compliance. If it advertises a prescription drug, in prohibited country, in countries which prohibit it. Now, this is the identification of risk. That you have identified a risk, that there is a risk of non-compliance, that they may non-comply with the risk. The second part of the risk is to write the impact of this risk. Now, what is the impact of this risk? Impact is that penalties may get imposed. If cannoli company fails. If cannoli company fails to comply with regulations. In severe cases, it may lead to suspension of license. In serious cases, it may lead to suspension of license. Now see, this all is the impact of this risk. Now I want you to write an evaluative comment. Now what is an evaluative comment? That as Cannoli Company relies heavily on advertisements, as Cannoli Company relies heavily on advertisements, their risk of non-compliance is higher. Their risk of non-compliance is higher. Why is it higher? Because they do too much advertisement. Therefore, they may run an ad in negligence. Now see, I have wrote a complete point, but if you can see that I did not write the whole point together. I wrote this point in 3 steps. First of all, I identified the risk that Cannoli Company faces a risk of non-compliance. Why it faces a non-compliance? Because certain countries prohibit the advertisement. Then I wrote the impact of the risk that there may be some penalties imposed. And then we gave an evaluative comment that as the company relies too much on advertisement, there is always a higher risk that they may get involved in a non-compliance. So whenever you write a risk, you have to make sure that you write that risk in 3 steps. The identification of the risk, the impact of that risk, and then the evaluative comment of that risk. Okay? Coming forward to the question, concentrate on it so that you can understand that how to write for the risk. The market is very competitive, encouraging rapid product innovation. Now again, when the market is innovative and there is rapid product innovation, you have to continuously invest on innovation. You have to continuously invest on innovation. If you fail to invest on innovation, you will get outdated from the market. Now, let's think about this risk. If you are involved in an innovative market, the employees are very important because they are the one who will do research and development. Let's think something more. The employees are very important. Your cash flow position is very critical. Because if you will not have sufficient funds, you will not be able to invest on R&D. You will not be able to invest in research and development. Now, if we find the financial data of this question, there is no financial data on first page. But if you go on second page, you have some financial information available. And if you look at net cash flow number, this shows that during the year, the company had a negative net cash flow of 1.2 million. Okay? Now, if we come back and we start to discuss this risk, the market is competitive. There is rapid product innovation. So you can write that as the company, as the industry is innovative industry, there is a risk that Cannoli Company drugs may get obsolete. Its medicines may get obsolete. And as a result, it will lose its ability to compete. What will be the impact of the risk? The impact of the risk that the company will not be able to compete in an innovative market. Or you can say that for innovation, the company would be dependent on skilled employees. It will be dependent on skilled researchers who have to continuously do the innovation process. So if we develop this risk like innovative market, now how we will write this risk? See, now please concentrate on the approach I am following. The market is innovative. The market is innovative. Now how to identify the risk? Cannoli company operates in an innovative industry which increases its reliance on skilled researchers on skilled researchers. Why it increases its reliance on skilled researchers? Because they are the one who will innovate and they will find the new drugs. Now, what will be the impact if skilled researchers leave cannoli company, then it will affect cannoli company's ability. Then it will affect companies' ability to innovate, to explore and innovate new drugs. To explore and innovate new drugs. To explore and innovate new drugs. This will reduce its market share. Now see, I have identified the risk. I have written the impact of that risk. Now what I need is that I need to give an evaluative comment. Now what evaluative comment I can give? Can anyone tell me? What can be the evaluative comment? The company is involved in innovative industry. There is an impact that if the researchers leave the company, then company will not be able to innovate. What can be the evaluative comment which increases the risk? Now see, you can write that company has negative net cash flows during the year. And these negative cash flows can affect the cannoli company's ability to continue to invest on innovation. Okay, so now that can be the evaluative comment which increases the risk. Cannoli company's ability to innovate. Cannoli company ability to innovate is also at risk due to negative cash flows. Of company during the year. Now see, as the company has negative cash flows, this increases its risk that it may not be able to innovate. It may not be able to continue to innovate, and if it will not be able to continue to innovate, it will lose its market share. I hope that you people are getting my point, that you need to train yourself. Now, concentrate on the word I am using. You need to train yourself that you have to write the risk in 3 steps. Always identify the risk and then stop. Then think about the impact, write the impact, and then again stop. And then think about an evaluative comment, that how this risk is increased or how this risk is reduced. Okay? Are you people getting my point? Okay, now, coming back to the question. Just a minute. Okay. Just a minute, yeah. Coming back to the question. Now, new products are continually in development and improvement are made to existing formulations. 4 drugs are in research and development phase. Drugs have to meet very stringent regulatory requirements prior to being licensed for production and sale. Research and development involve human clinical trials the results of which are scrutinized by the licensing authority. So there is one more risk, that as the licensing authority scrutinizes the result, and as we have to meet the very stringent regulatory requirements, there is a risk that the company may not be able to comply with the regulatory requirements, and as a result, it may not get licensed for its drugs. Now see, there are 4 drugs already in research and development phase. If you go in the financial data, you can see that they invested research and development cash outflow in the year, $3 million in the year. And total development asset is 50 million. Now this total development asset relates to all the development assets. But in a particular year, they have invested $3 million on the 4 of its drugs. And if it fails to get the regulatory requirement, this will increase its risk. Now, obviously, in the exam, you have to read the whole question. If we read this paragraph, there is a reference of an accident. But I don't expect an examination that you read this question by identifying any particular para. But obviously in the exam, you would be reading the whole question. Now, in addition, the company has asked the bank to make cash of $3 million in the event that an existing court case against the company is successful. The case is being brought by an individual who suffered severe and debilitating side effects when participating in a clinical trial in 2013. Now see, I will write the risk specific to this paragraph later, but currently at this point of time, I can give a reference that as the licensing authority reviews the results of the clinical trials, and we have already injured a person in 2013, there is a very high risk that licensing authorities will be very vigilant, will be very alert, will be very suspicious while dealing with us. They will look at our clinical trial results very carefully. So this can increase the risk, and we can write an evaluative comment. Now see, I'm writing this risk and I want you all to be focused. Now there is another risk which is of non-compliance to regulatory license, the drug license which you need. So there is a risk that you may not comply. So now see how I'm writing this risk, and I want you all to be focused, okay? Now, cannoli company faces a risk that it may not get a license for its new drugs under development, under development. So there is a risk that it may not get the license. Now, what will be the impact? This may lead to wastage of funds invested in development phase. Now, if the license is delayed due to compliance issues, now see, please concentrate that how I'm writing is delayed due to compliance issues, then some other competitor may develop, a similar drug. Now see, the market is very competitive and you cannot waste time. If you get stuck in compliance matters, and if some other competitor launches a similar drug, you will lose the competitiveness. You will lose the first mover advantage. So Cannoli company faces a risk that it may not get a license for its new drugs under development. Now, what will be the impact? This may lead to wastage of funds invested in development phase. If the license, just a minute. Now, if the license, uh, gets delayed, then it may also lead to wastage of time, and some other competitor may launch the product earlier. So you have given the identification of the risk. You have given the impact of the risk. Now, how to write the evaluative comment? Now see, accident occurred in clinical trials. Accident occurred in clinical trials in 2013 has increased the risk as licensing authorities will be more vigilant, while dealing or while reviewing results of new drugs clinical trials. And this increases the risk of the license being rejected. Now see, Cannoli company faces a risk that it may not get a license for its new drugs. Now this will lead to wastage of funds, or this will lead to wastage of time. And the time is very important because considering that Cannoli company is involved in a competitive industry. Now, the evaluative comment is that the accident occurred in clinical trials in 2013 has increased the risk as licensing authorities will be more vigilant while reviewing the results of new drugs clinical trials. Okay? So I hope that you people are getting the point that how you have to develop the point. Don't just copy the points in your register. Concentrate on it, focus on it, that how I'm writing the point in 3 steps. Coming back to the question, it is common in the industry for patents to be acquired for new drugs, and patent rights are rigorously defended, sometimes resulting in legal action against potential infringement. So there is another risk that there is always an issue of patent rights in this industry, and it may lead to legal actions also. So there is a risk that someone may copy our patent, or there is a risk that drugs which we are developing is claimed by someone else as their patent. And as the market is very competitive, the risk is higher. And you have a negative cash flow of 1.2 million. Having this much negative cash flow, we can argue that your ability to fight a legal case is very less. You may not be able to fight a legal case. So a risk is that as the industry rigorously defends the patent rights, someone may copy our patent, or by mistake, someone may claim that the drugs which we are developing is their patent. and this will lead to wastage of funds in legal process. So see, I'm writing one more risk, and that is patent rights. I want you all to concentrate on it. See that how I am developing my argument. Now, first of all, I have to identify a risk. Legal action may start against Connolly Company, if four drugs which it is developing is claimed by someone else as their patent. Now you all know that when we talk about pharmaceutical industry, all the medicines, or I'll say that all the medicine companies, all the pharmaceutical companies develop similar drugs. Like, for example, if we are using a drug for headache, then we have a Panadol and we have a paracetamol. They both are very similar drugs. Or for example, if you have a back pain and if you purchase any medicine, all the painkillers have a similar formula. So now it is very important, and Connolly Company is facing an exposure that the drugs which it is developing is claimed by patent by someone else. Now, first I've identified the risk, now I'm writing the impact. If legal action is started, then Connolly Company have to bear a legal cost, which will further affect its cash flow. Now see, I have written the impact, and if you remember, in the last class, I was also writing a financial support, considering cash balance, considering negative cash flow during the year, of 3 million, Connolly Company may face difficulty while defending its patent rights. Now see, I have given a financial support through the numbers given in the question. I have identified the risk that legal action may start against Connolly Company if four drugs which it is developing is claimed by someone else as their product. Then I wrote the impact. If legal action is started, then Connolly Company have to bear a legal cost, which will further affect its cash flow. I have given a financial support that the company has a negative cash flow. Now I have to give an evaluative comment. How I will write an evaluative comment? As industry is competitive, therefore risk is higher because competitors will be aggressive in causing harm to other competitor. Now see, the industry is competitive. Or if you want, you can write one more evaluation, and that can be that in pharmaceutical industry, it is normal to have similar drugs. If we are developing a certain drug, it is normal that some other company will also have a similar drug. And it can argue that we also have a similar drug and we want to defend our patent rights. Okay? I have given evaluation on the basis that the market is competitive. You can give an evaluation on the basis that as it is a pharmaceutical industry, it is normal to have similar drugs. Okay? Coming back to the question. Now see, Cannoli company has approached its bank to extend the borrowing facility. An extension of $10 million is being sought to its ongoing loan to support ongoing development of new drugs. Our firm has been asked to provide a guarantee in respect of this loan extension. Now see, the company has approached the bank for extension. So we can write that there is a risk that this loan may get rejected. And if the bank will reject your loan application, obviously you will not be able to support your ongoing development. You will not be able to support the ongoing development of the drug. Now, if you go at the financial data, there is a gearing ratio, the debt to equity ratio, which is 0.8 times. You can argue that a gearing ratio of 0.8 times is a high ratio. Now this shows that the company has a debt to equity ratio of 0.8, which means that the debt is almost equal to the equity number. Okay, the debt number is getting almost equal. So you stand at 0.8, the gearing has declined during the year, but still you can argue that it is at a higher level. We cannot say that it's less. Debt to equity ratio of 0.8 is higher. Your earning per share has already declined. Your profit margins have already declined. Okay, so you can give a support that considering the following financial position, considering the high gearing, the risk is very high that the bank will reject your loan request. And if the bank will reject your loan app request, then the $3 million which you have invested in the development process will get wasted. Because obviously, if the bank will not give you further 10 million, you will not be able to complete the development on time. Okay? So now see, I'm writing the risk, and the risk is rejection of loan. There is a risk that Cannoli company's loan request may get rejected. Rejection of bank loan. Now please concentrate on it and see that how I'm developing the point. The first step is to identify the risk. Cannoli company faces a risk of suspension in ongoing product development if bank rejects its loan application. Reject its loan application. Now see, this is the risk that there will be the suspension in development of the product if the bank rejects your loan application. Now what will be the impact? if this happens, then $3 million invested in product development during the year will also get stuck, because obviously you will not be able to complete the development unless and until you get the $10 million from the bank. In product development will get stuck as company lacks funds, to complete development. Okay, so now this is the impact of this risk. Or you can also say that it will affect the cannoli company's ability to compete in innovative market. Because if obviously you will not be able to complete the development of new drugs, you will not be able to compete in this innovative market. Now you have to write the evaluative comment. Considering the high gearing ratio of 0.8 and falling earnings per share, cannoli company may not be able to get loan, or if it gets, then it will be at higher interest rate. May not be able to get loan at normal rates. If the bank will give you the loan at times of falling performance, then it will be either it will be a rejection of loan, or the bank will demand a higher interest rate. They may not be willing to continue with you on normal terms. So cannoli company faces a risk of suspension in ongoing development if bank rejects its loan application. If this happens, then $3 million invested in product development will get stuck, as company lack funds to complete development. Considering the high gearing ratio of 0.8 and falling EPS, cannoli company may not be able to get loan at normal rates. Okay? Are you getting my point? That how I am developing the point is step by step. Coming back to the question. Now see, in addition, the company has asked the bank to make the cash of $3 million available in the event that an existing court case against the company is successful. So now the company is facing a case also. And whenever you face a case, there is always an issue of reputation. The court case is being brought by an individual who suffered severe and debilitating side effects when participating in clinical trials in 2013. So we can write a risk that as the company is facing a case and it is claimed against the company, that company has caused injury to someone, then obviously the customers will be reluctant, will not be willing to deal with cannoli company. And in that case, the customers will be reluctant and the company revenue will start to decline. The risk is higher because the company also lacks funds to pay off that person. You can also write that $3 million is the compensation which you need to pay. What about the regulator who may impose penalties? Okay. Now see, I'm writing a risk that there is a risk of loss to reputation. I want you all to concentrate on it, that how we are developing the point. Loss of reputation. Now, why there is a risk of loss of reputation? Due to legal case filed against company a risk to reputation, a risk to reputation exists, a risk to reputation exists. Customers may not be willing, customers may not be willing to consume, cannoli company may not be willing to consume cannoli company drugs, cannoli company drugs when they will get to know about this accident. Obviously, they will not be willing to use a drug which has caused debilitating side effects in clinical trials. We'll get to know about this drug. This may lead to failure. This may lead to failure of drug under development. Failure of drugs under development. Obviously, when the people will get to know that this drug has caused an injury in the past, they will not be willing to use this drug. Now, see, I have identified the risk of reputation. I have written the impact that customers will not be willing. And now I have to write an evaluative comment. As company lacks funds to pay compensation of $3 million, therefore risk is higher. Why risk is higher? Therefore risk is higher that in case of being unsuccessful, company will face, in court, company will face greater problems because it even do not have funds to pay off the $3 million. And if you know the bank do not gives financing in order to pay off your penalties. Bank gives you a financing if you are doing some development work, if you are going for a growth, if you are going for an investment. The bank will not give you funds for your bank loan, for your court case penalties, obviously. So the first risk was advertising regulation. The second risk was innovation. Then there was a regulatory risk. Then there was patent rights. Rejection of bank loan is obviously a risk. And loss of reputation is also a concern for cannoli company. So by now we are done with 6 risks and we need to write 3 more risks. Now see. In January 2014, cannoli company began to sell into a new market, that of animal health. This has been very successful, and sales of veterinary pharmaceutical and grooming products for livestock and pets amount to approximately 15% of the revenue in 2014. Now see, this is an inherent risk that whenever we enter new industries, we may lose focus on our existing businesses. Whenever we are entering new industries, like if we entered the animal health segment, we may lose the focus on our existing businesses. Now see, if this happens and if we have lost the focus on our existing businesses, then what will happen? It will lead to decline in profit revenue, and it will lead to decline in cash flow positions of our existing businesses. Okay. Now see, if we go and review the financial data, you can see that our revenue in the last year was $38 million. And this year it is $40 million. But in this 40 million, 15% of the revenue, 15% of the revenue relate to this new business. So I can say that the revenue from my existing businesses was $85 million. If you take 85% of $40 million, it will give you into $34 million. Last year, your revenue was 38, and this year your revenue is 34 million from the existing businesses. You can argue that our total revenue has increased. You can argue that our total revenue has increased, but still our revenue from existing businesses has declined. And when our revenue from existing businesses have declined, it can be argued that the company is losing focus, that the company is losing focus in its existing businesses. Okay? The company is losing focus of its existing businesses, which may lead to problems in moving forward. I'm repeating it again, that the company has entered a new market. And I told you that whenever you enter a new market, there is always an inherent risk. There is always an inherent risk that you may lose focus on your existing businesses. The declining revenue in the existing businesses show that this risk has materialized. Now see, I'm writing this risk and I want you all to focus. New markets. First of all, I'm identifying the risk. Cannoli company faces a risk of losing focus on its existing businesses, for risk of losing focus on its existing businesses due to entrance in new market. Due to entrance in new market. Now, Cannoli company faces a risk of losing focus on its existing businesses due to entrance in new market. If this happens, then Cannoli company will not be able to survive in its existing competitive industry. You already know that its industry is competitive and it has to be very vigilant in its competitive industry. If it will lose focus, then it will also lead to non-compliance matters. Now see, if revenue of current year is evaluated from existing businesses, then it shows a revenue of 40 million multiplied by 85% which is 34 million, shows a revenue of 34 million, which is 4 million less than previous year, which is, now see, last year we were at 38 and now we are at 34. So if you calculate a percentage, it is 10.5% less than previous year, which is 10.5% less than previous year. This shows that the risk has materialized and you have started to lose the market share. So you have to be very alert and you have to be very careful, because what was the suspicion or what was the threat has now started to materialize. If revenue of current year is evaluated from existing businesses, then it shows a revenue of 34 million, which is 10.5% less than previous year. Risk has started to materialize as cannoli company is facing a decline, is facing a falling revenue in existing markets. Now see, I have used the financial data and I have developed my evaluative comment. So cannoli company faces a risk of losing focus on its existing businesses due to entrance in new market. If this happens, then cannoli company will not be able to survive in competitive industry. Okay? Will not be able to survive in competitive industry. Why it will not be able to survive in competitive industry? Because the market is competitive and you are focusing on new businesses rather than continuing on your existing businesses. Okay. Now see, coming back to the question, another success in 2014 was the acquisition of Cold Comfort brand from a rival company product to alleviate the symptoms of cough and cold under this brand. The brand cost $5 million and is being amortized over an estimated useful life of 15 years. Now, after reading this, I can argue that company has spent $5 million during the year on Cold Comfort brand. You have obviously invested by entering into new market of animal health. You are also investing on product development and you have invested $3 million on product development. You are already facing a court case. You are already facing, you need already funds for continue your product development. So you can say that apparently cannoli company needs a very careful cash management, because the way they are operating is they will soon run out of cash. They have spent $5 million on Cold Comfort, they have spent on entering in animal health, they have spent on the product development, and now they are short of cash to complete the development of the 4 drugs, which in which it has already invested over the years. So you can say that cannoli company seriously needs an improvement in its cash management. Now you can write a risk that cannoli company needs an improvement in cash management. Now I have told you in the previous question also that when you are writing such risk, you don't need to follow the format like identify, impact, and evaluation. Now, while writing these risks, you have to gather the data which is scattered throughout the question and you have to develop your argument. Okay? Now see, company has invested $5 million in acquisition of Cold Comfort brand in acquisition of cold comfort brand, along with investment in new animal health segment, along with investment in new animal health segment. This has resulted in company facing a cash flow shortage in completing its product development, in which it has already invested $3 million. It has already invested $3 million. Company has now approached bank. For loans of 13 million, 10 million for product development and 3 million for the court case. Company has now approached bank for 13 million due to liquidity issues. Cannoli company has to work on cash flow management, has to manage its cash flows, as currently company has acted in bad manner, that you have already invested your all funds. You are already under product development phase, and you are investing 5 million in a new brand. You are entering an animal health segment. Now I cannot understand that what this company is trying to do. You are just investing your funds and you are not completing the developments, which is your key business activity. You are not completing the development in which you have already invested $3 million. So rather than going and running and investing in new businesses, you should be more careful and you should be investing in your existing businesses. And now when you have ended up all your funds, you are now going towards the bank. And if the bank will reject your loan application, you are in serious problems. So this shows that the company has not managed its cash flows carefully. It should work more carefully. It should work more closely in its cash flow management. Rather than just investing in new businesses, it should work more carefully on cash flow management. Okay? Moving forward in the question, let's see what the examiner is saying further. Just a minute. Okay, so we were moving forward. Cannoli Company's accounting and management information system is out of date. Whenever you read this point that the accounting and management system is out of date, you always start to think about a risk that as the systems are out of date, the company may be taking wrong decisions. But it is written that this is not considered to create any significant control deficiency. But the company would like to develop and implement systems next year. Management has asked our firm to give advice on the system as their specialist in-house knowledge. So now it will be an ethical issue. But as the examiner has written himself, that there is no significant deficiency. So we will not write this risk in the examination. Now, Moving forward, the revenue has increased if I consider the whole amount of the revenue. Now, I'm not looking for the existing revenue. If I look for whole amount of the revenue, my revenue has increased by 5.2%, but my operating profit has declined. By how much? It has declined by 10.8%. My operating profit has declined. My profit margins have declined from 24% to 20%. My earning per share has declined. My net cash flow has also got negative. Research and development outflows, total assets, and we have gearing. So if I look at this data, that revenue is increasing, but the profit has declined, the margin has declined, the EPS has declined, the cash balances have declined. So we can say that there is a risk of over trading. Now, if you all remember that what is over trading? Over trading is a situation when your revenue is increasing, but your cash balances and other performance indicators are declining. You are just running fast to increase the revenue. You are not looking at the cash balances. You are not looking at the profit margins. Now see, if normally the revenue increases, your profit should increase. If normally the revenue is increasing, your profit margins should rise. But as you can see in the situation, your revenue is increasing, but all other performance indicators are in falling trend. So we can say that there is a risk of over trading. Now see how I'm drafting this risk. Now see, this is also a risk which is developed from financial data. Over trading. Revenue has increased. Revenue has increased by 5.2%. Revenue has increased by 5.2%, but profit margins showed a decline. Of 10.8%. Now, what is shown by this? If your revenue is increasing, but your profit margins are in falling trend, you can argue that your performance is moving towards a declining trend. Cash balances have also shown a decline, and EPS has also fallen. This shows that organization has weak cost control. Now, why weak cost control? The cost control is weak because if your revenue is increasing, your profit margins should have increased. But here in this case, your revenue is increasing, but your profit margins have declined. Your operating profit showed a decline of 10.8%. If your operating profits have showed a decline of 10.8%, it shows that you have a weak cost control. This shows that company has weak cost control. Okay? And plus, you can also argue. Further, it can also be argued that company is doing over trading. Why company is doing over trading? As when revenues increase, when revenues are increasing, cash balances should have improved. But your cash balances have not improved, rather they have declined. Should have improved. Okay, now this shows that you are doing more credit sales. So see, now when you write these type of risks usually involve the compilation or that you have to gather all the financial data and you have to make an argument that your revenue has increased but your operating profits showed a decline. Cash balances have also shown a decline and EPS has also fallen. This means that revenue is increasing but the cost control is weak. And then you can also argue that company is doing over trading, because if they would have been managing the cash in a better position, then their balances should not have declined. So we have written 1, 2, 3, 4, 5, 6, 7, 8, and 9 risks. And these were all which were required in the question. If we review the other data also, we have a net cash flow, research and development, total assets, and gearing. Now, this is the all data from which we cannot generate any more risk. But obviously, we have written all the risks which were required in the question. Now, you have professional marks, which are 4 marks. So you need to write an email, for which we left this part of the question. There's some space for this. So let's write an email. Audit manager, Ali Stone, subject, and then we have 4 requirements. So we just know that how to write the email, because I have made you written in the past question also. Now see, the email will be to Ali Stone, audit partner, from audit manager, and the subject of the email is audit planning, Cannoli Company. Audit planning for Cannoli Company. And now we have to write an introduction that in relation to audit planning for Cannoli Company, in relation to audit planning for Cannoli Company for the year ended. Now, what is the year end? For the year ended 31st December 2014. Now, I have told you that whenever you are writing this, you need to change the name of the company. You need to write the year end. For the year ended 31st December 2014. Now, this is a standard email. Following information is relevant for evaluation of. Now, you need to refer keyword of each requirement. The part A of the question is business risk. For evaluation of business risks, risks of material misstatement, ethical issues, and audit procedures. Now, these were the 4 requirements of the question which I have briefed. Now, when you are writing the email format will always remain the same. You just need to write the company name, the year end, and the keyword of each requirement. So if you look at my entire answer, I have written 3 colors so that you can identify the impact and the evaluative comment part. What I expect from you is that now we are done with 2 questions of business risk, and we will done 2 more questions of this topic. But before moving towards 2 questions, I expect from you people is that you should you should review the examiner answers first of these two questions before moving towards the third question, so you have a better idea that how I am developing the answers. Okay, I will share the working file of this audit planning part on the drive so that you people can access. But I recommend you that you write the answers while I'm writing it on the screen, so that you have an ability, or you learn the technique to write an answer and it gets fluent on your hands. Okay? So in the next class, we will be doing one more question, which is the Sunshine Hotel Group. It would be much better that if you will keep that that if you will read this answer in the question in advance. I'm attaching this question also in the file, and I expect from you people that you should read the question first before coming to the next class. Okay, Dove Company or Sunshine Hotel Group. Okay. So see you all in the next class, in which we will do one more question. And then in the next class, we will doing one more question of Huntsman Company, which is also a business risk question. Okay. Thank you, everyone.